Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three stocks, three charts, three trades. Rick Ducat will take us through the charts. And here to take us through the trades, we've got Mike Shorr, Director of Trading Education, Prosper Trading Academy. It's good to see both of you. Mike, want to get your perspective, just a big picture take on how you're seeing the overall market action today.
Well, yeah, I mean, clearly it's good news. What does give me pause, a couple of things. One, it almost seems like it was too easy that we are and the Chinese are pretty staunch negotiators and each with their own strengths and potential weaknesses. But the market is obviously, and they should react to it in a positive way. Now, what happens over the next 90 days? That's going to kind of play, because I don't think it's not. I don't think it's going to be that smooth. I think we're certainly tracking in the right direction, but I think that I don't believe it's smooth sailing. We're going to see some back and forth here. So staying nimble and and keeping things tight with a bullish bias. That's the way that I'm playing it.
Okay, speaking of bullish bias, Qualcomm got some bullish sentiment around it today, but sure, it's had difficulty year to date. That's first on your list. Tell us about this.
Yeah, so I figured I had to give something for the bears, and so the semis have been coming back from where they were, and this and kind of along with AMD, QCOM's been one of the weaker names out there. And so if this whole thing fell apart between last night and this morning, then that was a really good candidate. But that's why I'm putting a price limit on this thing. I want to be below the 50-day moving average. We gapped up above that today, but it's still a good play if things turn around. We know things can turn around quickly. So below that 50-day moving average is where I'm looking. They hadn't been able to get above that 50-day moving average in months, and so it's a good sign for QCOM. But I think that if things do turn, that's going to be one of the names that gets hit first.
So if things turn, all right, Rick, that's the setup for you, especially when it comes to the chart for Qualcomm. Take us through what you're paying attention to here.
Sure, 135 seems like a level many people would have their eye on. The reason I say that is that's roughly about where we had our recent relative low point here. So for the most part, price has been making a series of higher lows. I think you could have drawn this trend line here. That was probably the best fit trend line here. Price did cross beyond it, though. And then recovered. So even though we have gapped up and we have crossed above our moving averages, we actually haven't broken back above that old trend line. It's seeming like it could be a resistance point right around the 153 mark or so. And if you look back here, 151, our green line, a low point, and then lows, and then lows, and then lows once again here. So that's a key area that we could hold on to, a frequent area of prior support. So 151 would be really important if it were to not hold as we progress further through this trading day. If we were to keep moving to the upside, though, we've got our 252-day exponential moving average just above near 159, and then 175, another repeated ceiling here. So not just kind of corresponding with our green line, that's our floor there. 151 to 175 is really quite an important area for this particular chart. And we can see as well the volume profile point of control matches up roughly with our upper end there. So heavy trading at that high ceiling level, and another significant volume node here, a bit above, though this one comes in more like 157 or so. So some key areas to watch.
Okay, key areas to watch, 151, a level to hold. Mike, any final thoughts on Qualcomm before we move on to your next trade?
No, I'm seeing the same thing, and I'm targeting that 135 area if we do fail on this rally.
Okay, you're targeting the 135 area on there for Qualcomm. All right, let's move on to your next trade. Cognizant Technology, it has outperformed the S&P 500 year to date, but what's your take on this?
Yeah, this is exactly the type of move with these next two trades that they were coming up to resistance at the top. I use a Donchian channel, using that as my resistance point. They both, and it gapped up above there. So I mean, we have a lot of clear sailing in front of us to the upside in Cognizant.
Okay, all right. So, Rick, you're next up. What is this? What are you paying attention to when it comes to the levels for Cognizant Technology?
Well, another chart where, to me, it looked like we had a pretty notable floor and ceiling to consider. What I mean by that is our green line here near 75, repeated low points, once again here with some intraday fluctuations beyond that level. But for the most part, this was a noteworthy level to watch. We did have our big breakdown here. We bottomed out around 65. We made a higher low. And then we've started to rally to the upside. Earnings gave us another boost. We've crossed above all our moving averages that we follow on our chart here. The faster ones are starting to outpace the slower ones as well, so signs of trend improvement. However, 82, this is the corresponding ceiling to the floor near 75 that I mentioned. So resistance and then support once again. Now today we are retesting that level. So a push above 82 opens the door to retesting those relative highs near 87. RSI, also note, we are on the verge of crossing into the overbought area, typically regarded as a sign of strength in a trending market here. So if we were to include our other studies, we can see that this area right here, quite a lot going on. We've got all three of our moving averages converging toward each other. Yellow 21-day, orange 63-day, purple 252-day, exponential moving averages, and our point of control and our -1 standard deviation channel. And our so really quite a lot. 75 to 77 or so is major support. And then 82 and 87 are the resistance areas to keep an eye on.
Okay, 82, 87 resistance areas to keep an eye on. Mike, let's talk about your final trade. You've got Flex on your list. It sounds like you've got some bullish sentiment around it. It is outperforming the S&P 500 year to date, but I don't want to put words in your mouth. You tell us your approach here.
If you look at it, it's a very similar chart to Cognizant. Same sort of thing. Something that had even it held up pretty well during this whole little sag down, and now we're seeing that breakout again with a lot of room to the upside.
Okay, so you see potentially a lot of room to the upside, and your trade type is a call vertical here. Rick, take us through the technicals for what Flex looks like to you.
Sure. So another one where we had a strong rally. We had a break above some significant price activity. 37.50 was a gap back here, and then lows, and then a brief holding point, and then resistance. So we've broken above this level, 37.50. Now it becomes a supportive area to watch. Our white, steep, shorter-term trend line, really quite steep if you look at it. It marks a 63% rally since these lows here. It's still in play. And our other trend line here, starting with our highs near 51, connecting here, that one has been broken now. So that was a bit of resistance during the past couple sessions here, but now it seems like the way has been cleared potentially to retest those highs near 45. Notice that RSI, kind of a bit of a fast forward from our last chart here. This has crossed into the overbought area and broken out above the resistance. So a pretty interesting development here for anyone who had a bullish outlook in this name. And if we were to look a bit closer here at some of our other studies, well, we lost our chart there. Sorry about that. But what I was going to say is that we are, making our way above these areas here, and there's not really a lot of volume to consider here that could slow us down on the path to those old highs.
And then, Mike, any final thoughts you want to leave us with on Flex, Cognizant, or Qualcomm?
I'm looking at that same area to target in the upside. Actually, I'm targeting 44. That I use the implied volatility to figure out the expected move, and that lines up with that 41, 44 is the call spread that I'm going to do, which keeps us below that resistance at that 45 area.
Okay, all right, so that's the levels to pay attention to. That's Mike Shorr, Director of Trading Education, Prosper Trading Academy, and our lead market technician, Rick Ducat. Thank you both.